Nah, I'm talking about the picture that. All right, let's get it. Let's get it. How you feeling today?
Pretty good. Pretty good. Looking forward to some good news, hopefully.
Hopefully. So, a lot's going on in the market. Every day is a roller coaster. If you're not a stock investor, then you should seriously look into, nausea medicine because it's a roller coaster. It really is a roller coaster. Every day something happens. Every day it's a thrill. Every day it's a drop. So, overnight, breaking news. The eviction moratorium has been lifted by the Supreme Court. Explain what that is, explain what that means, and explain what repercussions that may have on the market itself.
Okay, so the moratorium was a bill that was signed into law, giving the tenants a grace period to defer their rent. In light of the pandemic. It's been extended maybe 2 to 3 times since the pandemic began in 2020, early 2020, to a most recent expiration being on July the 31st with the CDC stepping in to extend it even further out until October the 4th. However, as you mentioned, the Supreme Court stepped in and they overruled the CDC and Biden administration's extension, lifting the moratorium. The repercussions of that is that evictions can go into play immediately, meaning that tenants will be out on the street. People potentially can lose their homes. And a disaster is underway.
Yeah.
Can be underway.
Yeah, and it's crazy because, it is August, the end of August, and, we're slowly creeping up on fall, winter time. And the longer this starts to play out, it could be a real ugly and cold winter. It can be a real ugly and cold winter for a lot of people. I'm not sure if the evictions will happen right away, or if it may take a month
week
a week, a week, 2 weeks, a month. But we're creeping up on it starts to get cold outside, and it could get real ugly for a lot of people.
Yeah, we're living in, again, I said it yesterday, in some uncharted territory.
And it's critical to emphasize the uncharted territory. Like we've never seen a time like it is today.
Right.
We've never seen
not
a time.
In my lifetime, and certainly not in yours.
Right. So go ahead.
It's scary, and it's unfortunate. I've been saying, off camera that I think, something's going to happen while the Senate is out on break, break from, the last session, and something will happen. I suspect that something will happen prior to them coming back. By the way, nothing we say on this live, none of the information we share is financial advice. It's all opinions and perspective. Check with a financial advisor before you make any financial decisions. Do your own due diligence. All information is for education and entertainment entertainment purposes only. Thank you, sir. I got tongue tied.
That just means you're talking too much.
Talk to us then.
But no, I think. So how does this affect specifically the stock market, though?
Great question. If this mass exodus, so to speak, of these homes and apartments and real estate will be tremendously affected. We could see another 2008 situation.
Right.
Where, the housing market crashes. It's scary. I'm telling you, like,
and when the housing market crashed, eventually the stock market crashed
right,
with it.
It's directly impacted and correlated to it. So again, and I'm glad you circled back because that's your question. How does this affect the market? As a result, I see the stock market crashing. We're at a time where the repo market is up. Jerome Powell speak. We'll get into that in a couple of seconds. It's just, I'm the scary part for me is I strongly believe that not enough people are prepared for these times. The pandemic hit us out of nowhere.
Right.
Some people, were living paycheck to paycheck. Even those who had, something saved, doing well because of their businesses and things. Businesses got shut down, so forcing those type of people to go into their savings and spend retirement money, and even causing doors to close. Right. So, it took people. I perceive it. It took people, and not enough of us, some time to gather their loins and get their feet back under them.
Right.
But not enough time to really devise and strategize a plan to move forward.
I'm not trying to sound preachy at all, but this goes to show the importance of, when the government aid came in and you had stimulus checks and you had, even unemployment coming through and different aids like that. A lot of people, rushed to the Gucci store. A lot of people rushed to these malls and spent it however they like to. And it's their money. They can spend it however they like to. But if you didn't save and if you didn't invest for a time like this, where really at any given moment, like that's
the faucet can be turned off
at any given moment. So now they're withdrawing aid. The Supreme Court has come in and said withdraw the aid. And now it's kind of like, what do y'all do? What do you do? Because now you may not have that, stimulus check, unemployment to save up enough for this harsh winter, or invest enough for this cold winter. So it's definitely a very scary time, a very up in the air time, and like I said, at any given moment, it can pop.
Yeah.
It can pop.
And so that's just one component of it. We got an article with Citibank.
Yeah. So City Strategist warns of a 10% September plunge. This is the Citigroup's chief U.S. equity strategist. So he's warning the marketplace of a 10% retracement of the stock market. So that comes right after the,
housing market.
Right, housing market scare that we're having right now. So what do you think he's hinting at? What do you think he's seeing?
I think he's saying the same thing that companies like Palantir are seeing. We mentioned earlier in the week how, they've invested $51 million into gold.
Right.
And they're now accepting gold from their clients as payment. I think he's saying the same thing that a lot of analysts and strategists was talking about earlier in the week, preparing for Jerome Powell to speak on today at 10. And with the belief or theory that he'll give up some type of guideline for tapering, again, meaning that the money faucet will be turned off.
Right.
I think he's saying that, an upcoming crisis, he mentioned 10%, which is still high,
right.
In retracement. Any type of retracement is not, is not good. But when you get into the double digit,
I'm about to say a 10%, like
yeah,
you said,
the double digit retracements,
yeah,
that's
it's
huge.
extremely important we emphasize what a 10% retracement
Right.
is in the market. That's a huge retracement.
Yeah. So that's what I believe he's saying. Man, my heart go out to people though. This is why we do this, to educate, right? This is why the Newage live stream and podcasts and, different things that we do in our media company, this is why we exist.
Right.
To have an impact in
Let me ask you this. If I'm a new investor, let me say it this way. If you're a new investor or someone just interested but hasn't gotten in yet, what do you do to prepare now? Because it's almost like I don't want to say it's too late. It's never, quote unquote, too late. So what would you do to hurry up and prepare for a potential harsh winter?
Great question. First thing is prioritize. Right? That's the very first thing I'm doing. Come up with a plan, with my highest priorities, putting them in order. With that, look for various opportunities to create revenue, right? So, several ways to make money online, right? And I'm just talking about if I'm limited in resources, financial resources, right? It's several things I can do to create resources, and then simultaneously, right? Educate myself on what industries and opportunities that best fit me and my priorities moving forward.
Right. So, and I mentioned this like a week ago or earlier this week. Times like this, it's huge to stay, in my opinion, it's huge to stay liquid.
Why is that?
Because when you get a 10% retracement, when you get a potential housing crash, and if you can capitalize on things being cheaper, things being more affordable,
right,
you can change not only your life but your family's life.
That's one of the first things I'm gonna look at. I'm gonna be honest with you, is the housing market immediately.
And we've been in, and I want you to go there. We've been in such a seller's market,
right?
So houses are selling for all-time highs and
that's
huge
what I was going to talk
ups,
about.
And people is pumping up the real estate market, and I'm like, why are you rushing into the real estate market?
Why is it at its height?
You might as well just wait,
right? Because
in my opinion, doomsday is right around the corner at any given moment,
right? So
you might as well just wait.
Right, that's a good assessment. You said where I was going at about the housing market, being at a 20+% appreciation currently. Right. So, as it turns on its head, upside down, you can get houses at a great discount.
Right.
There's going to be so much inventory on the market that it's going to be ridiculous.
And you got something to add, Antwain?
Yes, I want to say, is this a good thing for the market? The housing market crashing? Is this a good thing?
That's
I'm looking at the results online, and everybody is on their tippy toes, and they can't wait for it to crash.
See,
let me say.
Go ahead. Go ahead. No,
I see it as, I wouldn't say it's a good thing. From a capitalistic standpoint, it's opportunity.
Right. So again, as I was just saying, my message to anybody if I had a message for anybody that's about to enter this phase of where the markets are going, right? You gotta put in the work. You gotta grind. Build your capital up.
Right.
Because if my $500 I saved up, if my $1,000 saved up, if my $5,000 saved up, if my $10,000 saved up can get me a bucket and a straw right now, a bucket and a straw right now,
Right.
versus when a crash happens, I can get that bucket, I can get that straw, and in that bucket it may be some gold, some silver, some diamonds, whatever, because it's way more affordable. My $500 that I saved up, my 1,000, my 5,000, my 10,000 can get me way more. And then moving forward, or you should be forever prepared for what's coming next, for the next crash or the next potential. Like, think about it.
Yeah, because we got to remember that the markets are cyclatory.
Right. So think about it.
So I'm glad you pointed that out.
In 2008, we had a crash.
Right.
Right? Like a huge recession crash, right? And 12 years later, I'm just say 12 years later, we know we had some hiccups along the way, but I'm just say 12 years later, it's 12 years later, 2020 happens, and that was a nice crash, but the aid kind of
supported it.
Right, glued it together.
Yeah. Now that glue is coming apart.
Now the glue's coming apart. Just a year later.
Right.
So think about, that's basically 2 crashes, a potential third crash within the last 12, 13 years.
Right.
So let's just say I was 20 in 2008, and let's just say I'm 32, 33 now. That's not the case, but I'm just throwing the numbers out there. You get what I'm saying? You have to make sure that you seize this opportunity now. That way, the next 12 years, when you're 40,
right,
you'll be prepared, and your kids will be
set up. Yeah.
Okay, to add to that, in your opinion, do you feel as though this is all planned?
I'll let him answer that.
That's tough. Go ahead. Interject. That's a tough question.
Let me say this.
I'm going to share my perspective after that.
Yeah, let me say this. It's no definitive answer to that.
Right.
I'll say this, though. Whether it's planned or not planned, I don't know. But these people, the powers that be, know how they affect the market, and know how they affect the U.S. dollar, and know how they affect the housing market. So they know that they can glue it all together, and they know they can tear it all apart. That's their job. They know their job.
Right.
So I'm not going to say they purposely, I'm not going to say that I know that they purposely crashed the market or whatever the case may be. But I will say, whatever they are doing, they know the short-term and long-term effects that they have
right
on the market. And a lot of what me and LJ study is, and research, is how they continue to kick
the can down the road.
Kick the can down the road.
So let me say this to add to what Datwan just said. 2008 wasn't our first recession, but I just want to go as recent back in history, right?
1987.
Right. So I'm just going to go back to 2008, okay. Right? The Great Recession. One thing that's a reoccurring statement when it comes to the market is that it rhymes, or history often repeats itself. So like Datwan said, they're professionals. You know, this is not their first merry-go-round. If I'm a retail investor or your average citizen, and I can tell that the indicators, I can trace back the indicators to 2008 and what happened leading up to that crash and what, the surrounding things that caused it, I can 9 times out of 10, I can use that, trace that as indicators moving forward.
Right.
And we're not dealing with idiots, so to speak.
Right.
So if in 2008, the repo market eclipsed 400 billion before it collapsed, and before Congress went on break, or right around the time they ended this session.
You talking about this year?
This year, a couple weeks ago. The end of July, the beginning of August, whenever it was, right? Recently, the last session, we were teetering at that 1 trillion mark, which is double, the last in the repo market, which is double the last recession and the housing market crash. And then we continued, it throughout a pattern of days.
Right.
The indicators sit right in our lap. At some point, to Datwan's point, kicking the can down the road, the piper has to be paid. You had a question.
So, by all of this going on right now, do you think that the unemployment is going to skyrocket by the rent being due and stuff like that? What you think about that? What you think about the unemployment?
I don't think that
right
necessarily correlates, because you saying,
it don't correlate.
Rent being due whether I'm working or not working. You get what I'm saying?
So it would affect it the other way, right?
Other way.
Right. So if I'm unemployed, then I'll lose my house. But if I lose my house, that doesn't dictate me losing my job.
Right.
Words are wrong.
Okay. So you're asking it vice versa.
Yeah, vice versa.
I'm trying to think of the vice versa question. Ask it one more time. I'm sorry.
It's saying that the rule of law has to endure. This likely means that employment is about to explode higher now that rent is due, leading to the Fed to begin tapering their liquidity flood, which is crash the markets and almost definitely enhance a housing correction.
So again, I'm not necessarily clear. I'm not completely clear, but where I perceive you to be going at with your question is, unemployment has affected the market thus far. That's why, that's why we're in why we're in the situation we're in. Our whole economy came to, the global economy, but I'm just going to deal with the U.S. economy, came to a complete halt. Meaning people could not pay their rent. Again, with this moratorium being signed into law, it just kicked the can down the road. Right. So the rent didn't stop. It just was pushed down the road. So all those people have to pay back the money that's owed on their rent, on their house, on their mortgages, etc.
Let me say this. And this goes back to preparing for this type of stuff. Let me say this. I'm very fortunate and very grateful to be in the position I am in, because just a year ago I could have been facing the same situation that a lot of other people are experiencing right now. Let me say this. Jerome Powell speaks today, I think, at
10 o'clock.
10 o'clock.
So shortly, within the next half hour.
Right. And we can continue this conversation. We'll see where it goes, right? But how do you think, right? I'm asking you, how do you think this affects the market if I'm 5,000, 10,000, 15,000 in debt on my rent and housing
and
payment?
Mortgage, right.
Hold on, not done the question, right? So that's one phase. 2, unemployment may stop in different in different states.
Yeah.
In Maryland, it's like September, right?
This is so
and they tried to pull it from people back a month ago, and they had to sue Maryland to get to extend it. So that's phase 2. So if I owe $5,000, $10,000, $15,000 on my housing, if
you didn't have it before, where's you getting it at? Where's it gonna come from?
Where's it gonna come from? That alone, then you got Jerome Powell. And at any moment, the Federal Reserve can spike up interest rates, take that grips off the economy, and it leaves it feast or famine at that point. But I want to hear your perspective with all those 3 things correlating at one time. What do you think happens in that atmosphere, in that environment?
I got one word that's going to sum all that up.
Talk to us.
Halloween. It's about to get spooky. I think so. It's too much stuff going on right now.
Right.
You know, like the Powell, and you got, they ain't even accept what the Biden. The Biden had like he had like a law that he was trying to pass, or something he was trying to pass through that they stopped.
I'm not sure what specific law.
You talking about the moratorium?
Yeah.
The extension of it.
Yeah, the extension. Okay.
Yeah.
So all this is,
and it was already extended. It was already
what happened was, right.
It
no,
was already
you're
extended
right.
to September.
No, you're right. No.
What was it?
It was extended till July the 31st. It elapsed, and Biden and them had to remember. I can't think of the representative name. Plus, Bernie Sanders, the female representative.
Cortez.
Yeah.
AOC.
Yeah, that's what I was trying to think of an acronym. Had made a big fuss about it, about them knowing
this
that this
is vital
was
information. Go ahead.
You know, they knew that this information was coming. I mean that this mandate was due to expire.
Yeah.
Right? They knew. They pushed. They didn't do anything preventative.
Right.
Instead, they ignored it until the last minute and allowed it to elapse or expire. Right? Rushing in 3 days later to with the help of the CDC to get an extension. You know, of course, the landlords who's losing money, the business owners, that's what they are.
Right.
You know, going to put up a fight because they're at jeopardy of losing their business because they still have to pay bills for it. Talk to us.
So you probably haven't seen The Big Short, but in The Big Short, they had this game. Antwain, follow me. They had this game that they used as an analogy for what was going on in the housing market and banking industry. What was the game? I know you haven't seen it, but just guess what the game was.
Monopoly.
Jenga.
Ooh, that's deep.
Yes.
Why would they play that type of game?
Because
that is so deep.
Because what they illustrated in that movie and what you just pointed out, all this stuff is overlapping.
All of it.
All this stuff.
Talk about it overlapping because it's a number of things that we laid out. I want us to bring this together.
Right.
You hitting on something so, I'm just gonna say profound. You're highlighting it or illuminating it more.
Right. All this stuff is overlapping, and when you got unemployment,
come on, talk to us.
You got business owners have their assets in flux and overdue.
Right.
And the renters and the people that have mortgages on these homes are overdue.
By the way, interest rates are at 0%.
Right.
But we're expecting a lot of investors and analysts and experts, quote unquote, are expecting, some news and inflation's going on, but interest rates to spike.
Right. So you have all that just toppled on each other, right? And then
the dollar losing its value.
Inflation, all that. So we have all this stuff topped on each other, right? The repo market,
right?
$1 trillion in debt day after day. You have all these Jenga blocks tied up on each other.
You talked about the hot potato.
Right, but now think about this, Antwain. Last night, the Supreme Court rules the eviction moratorium to be done with.
Off the table.
The Supreme Court.
The highest.
Look. What happens to the Jenga piece? Whoop.
Uh-oh. Unstable.
Wobbly.
Wobbly wop.
Okay, so another thing. So if you're saying, that this thing is, Jenga pieces and it's layers on top of layers on top of layers.
And before you ask that question, I missed one piece.
Mm-hmm.
The Federal Reserve raising interest rates, lifting that hand, that may be a whole row that just goes. And the top. So go ahead, though.
So as these pieces is getting removed from these layers, is this a sign when the wobbly actually falls?
Well, that's always been the case. Like I say, history, if we look throughout history, this is what I'm saying about the intelligence. When people are not that, especially in this particular the political arena.
I want you to continue to go there. I just got this emphasis in my head. Okay. If the Federal Reserve, if you're a business owner and you're losing value on your asset, whether that's a restaurant, whether that's a rental property, and not only are your customers aren't coming in, but your renters may not be paying it.
Yeah, your revenue is dropping.
And they raise interest rates, so you have to pay more money because they raising interest rates. What do you do as a business owner?
Get a PPP loan.
Look, that was in my mind too. I'm
gonna tell
exactly.
You. Right.
Crickets. Crickets.
So you got. I don't want to say two options, but you got two.
One of two options.
You got two big options. It may be other options. You either start to sell your assets for cheap, so you done lost, but you just gotta get out. You like, I'm done with it before I lose all my money. You start to fire more people, so you can start to become maybe a little bit profitable. And then those are two big options that are on the table. It may be other options.
Your first two, they really like your first two options,
right?
In order, like you said, just to remain, not to go underwater,
right?
So people are affected in either sense. I'm sensitive to stuff like this because I'm not the smartest guy in the world. Going back to his question, so it just baffles me how we can put our trust into some people, to certain people or groups to take care of our well-being when throughout history it's been proven that they can't. We can take any number of times and record times in history and see that the outcome to disastrous events for the people has never panned out well.
Right.
And so it baffles me how we continue to rely, versus prepare and make our own outcomes.
Go ahead, Antwain.
Okay, I got a question. This just was scratching my head. So give me an understanding. When you have a market crash, right? That's going on right now.
Well, it's not happening.
It's not happening yet. Okay, so do it make the stocks cheaper since it's crashing?
It makes everything cheaper.
Everything. Okay.
It makes everything cheaper,
except for debt. Which is amazing.
Right.
Yeah.
So look,
everything but debt is cheaper.
And when he says debt, so
you broke it down.
Right.
You talked about that.
But I want to
make it perfectly
clear.
Transparent. Be transparent.
So if I'm a business owner, I told you I got the two options, right? Mm-hmm. I got a third option. What's the third option?
Sell it.
That was one of the options. Okay. The second option was firing people so I become more profitable.
File bankruptcy. Is that?
That's not where I'm going.
Okay.
Debt. Get a loan.
Ooh.
Go right back into the trap.
Go right back into the trap.
Dig yourself deeper.
Dig yourself deeper in the trap. And with you opening up that trap, like you said, that is more expensive now.
Right. Because of the
you may have been getting 8% interest rates on that loan. Now we may be 16%.
Right.
18%.
And again, to be honest, this is what happened.
And this is
what happened in the Big Short.
This is the feast or famine.
So let me say this.
Feast or famine.
Let me be transparent with this. When the markets finally began to crash back in 2008, and this is what I believe, that last Jenga piece may come, or potentially, people signed off, banks signed off, and allotted people what you would call a adjustable mortgage, meaning that the interest rate goes up and down. It can if I had a 6% interest rate the first 3 months, my 120th month, that thing can jump up to 24%.
This was happening.
See, this is why ignorance is deafening and education is dangerous. Because they know this, by the way. Which is why, so many people was able to get those loans back then for houses and assets that they couldn't afford.
Right.
Because debt would always be that equalizer. Nullifying, individuals, ignorant individuals, and by that we just mean unknowing. Ignorance just meaning unknowing, right? That the type of loans and securities they were entering into.
So you mentioned, that it's mind-boggling that we continue to be a relying society, or people that rely on the system, versus a preparing society, people that prepares for the system to fail, I guess. Mm-hmm. How does that change?
The blockchain and cryptocurrency. Decentralization.
Explain that.
Okay, so decentralization really affords people, we can think of decentralization in this. I'm going to give the skinny. Think of the barter system. Back in the early centuries, if I needed, some of your wheat or barley, I may give you a couple of my cows in exchange for that wheat or that barley or fish or whatever it is that I needed from you. So we would enter into a medium of exchange, exchanging one value for another. Right. So with the blockchain and cryptocurrencies, these assets that digital assets that have been developed and created will be able to do the same thing. Exchange value without a centralized, a middleman, so to speak, adding. It'll be direct exchange.
Yeah.
So it's happening. We can see it in the energy sector. You know, I can't think of the company right offhand. I'll get this information. Warren Buffett is a ghost investor in the energy sector, coupled with Ripple, which is a blockchain company, right?
Yeah.
Where people can get their gas, will be able to get energy / gas and electric from the same versus going through BG&E or Constellation or whatever your current energy provider is.
Right.
You enter into a smart contract, which is a digital asset, with the direct provider. You go straight to source.
Right.
You know, so that will change this reliance, so to speak, on this antiquated centralized system. You know, from a financial aspect, you know, people will no longer have to go to the banks for solutions, you know, to find financial resources, loans, etc. You know, right now in our banking system have this red tape and guidelines, credit score, yada, yada, yada. We're moving away from a debt system to an asset-based system.
You had something to add, Antwain?
No, that was perfect. That was perfect. I like that.
So I'm glad you brought up blockchain. I'm glad you brought up crypto. And really what you're talking about is decentralization versus centralization.
What's your thoughts on that? After you, I don't want you to lose your train of thought.
No, I can answer that. What's my thoughts as far as what?
Decentralization versus centralization. The war. No, not even the war. What's your thoughts on it? What's your general thoughts on, and how it affects investors / society moving forward?
I think I'm not as optimistic as you are.
Okay.
Because I feel like the powers that be that control the centralization world.
The centralized world,
The
right?
centralized world,
No,
my bad.
you cool.
Will not allow this decentralized movement to fully take place. I think we'll have elements of it. I think we'll have certain decentralized systems. But if you still have a centralized governed
system, or society,
then is it really decentralized?
So let me say this. I agree that it may not be a fully decentralized system, but the one thing that we don't have as much now, let me say it this way. I believe it provides more opportunity, right? So whereas though I just gave an example of when you're going to get financial instruments, you know, to satisfy, you know, your needs, loans, etc., right? You have to have a certain credit score, things like that. You can get those loans from other outlets / resources outside of the centralized banking system.
Yeah.
You know, so as a result, more needs are met.
Yeah.
You know, versus depending on and relying on the only places to get them in under the fully centralized system.
So I'm looking at a tweet right now. It was tweeted 7 minutes ago from @hipster_trader. So shout out hipster_trader. He says the entire financial system depends on the words of our dear Jerome Powell.
Which, by the way, he speaks in the next, he's supposed to come on in 14 minutes.
Is you sure he comes on at 10?
What I've read, I'll reconfirm.
Yeah,
Let me
just
look
try
that
to
up real quick.
reconfirm
Good, you got
that.
another
Nah, so I'm just going to give us a quick rundown
of what's happening in the market.
Yeah,
By the way, We know that this was a little bit different than our normal approach, but again, it's concerning, and our job is also to inform and make people aware
Right.
of components that they may not be aware of that affects directly and indirectly affects the stock market.
Yeah, so we have a huge runner today. It was running really up during pre-market. Support.com Inc. ticker symbol SPRT is at 36.57. It was up it's up $16.87. That means it's up 85% on the day. So that's a huge gain. I think it's having a short squeeze. So we continue to see these short squeezes happening, and they don't have to be the typical popular retail stocks, the typical popular meme stocks, if you will. We continue to see some of these other stocks squeeze. So let's get into it. Blank charging, charge point, and plug power is all up on the day, over 1% on the day. Plug power is at 26.20, charge point is at 20.64, and blank charging is at 30.74. So blank charging just actually went break even today, so zero. Hasn't decreased, hasn't increased. Let's talk about Palantir. Palantir is up 3% right now. It's at 25.62, and it's up 75 cents. So I believe Palantir is really starting to creep up. I'm kind of mad because I really wanted to be in the red, to be honest with you. But I think Palantir is starting to creep up, and if it can break, what's crazy? I had a dream Palantir ran up like $20 last night.
It's going to happen.
Yeah, it might. I think that was a warning for me. Like, get in now. Yeah. So Palantir, I think if it can break that 26, 27, 28, and it's fighting to get up there, I think it can start to have a huge run. Remember, Palantir's, I don't know the 52-week high on it, but it was above 40.
Yeah, it was around it got to 45, I believe.
Yeah, so
specifically because I was in it during that time.
Yeah, so that can potentially have a huge run. AMC is up 32 cents today. It's at 40.63, so it's cooling off after what we presume was a
good week.
But the margin call that happened earlier this week. So AMC is at 40.63. You know what we haven't talked about in a while? Sonic has been creeping up slowly.
Please slow down. By the way, that's a great stock that myself and Datwan's looking at. Go ahead. I'm sorry.
So it's at 3.93. It's up 5 cents a day. Anything near that $4 range is where it's like, it's starting to get its strength back. It's starting to get its feet back. So obviously we want it in the low threes, maybe even the high twos for buying opportunity for me and you. Let's talk about Nvis. Nvis is at 14.48. It's up 26 cents. That's another stock that's trying to slowly get its feet under it. I think it hit 12 not too long ago, maybe last week, maybe earlier this week, and now it's having consecutive green days, and we're starting to see that, get some strength back to it. Let's talk about SoFi. SoFi Technologies, ticker symbol SOFI, is at $14.26. This is one of my favorite companies on my watch list. It is down 11 cents right now, which for me, it's a great buying opportunity right now as we speak. I believe SoFi is a good 1 to 2 year play. With that being said, though, with this much uncertainty in the market, you have to be careful with any stock that you invest in. Again, this is not financial advice. If you're watching this, like, comment, and subscribe, and we appreciate the support we're getting. We're not closing out. I'm saying if you're watching this, please give us a like, please give us a comment, subscribe. We are not closing out. We are still talking. We like to talk. Go ahead.
Yeah, I just wanted to give an update on Jerome Powell. He does speak at 10 a.m., which is 9 minutes.
Okay.
All eyes and ears will be glued to the airways.
Do we want to stay live for that, or will we
I think we can touch back on it
later today?
in the podcast.
Okay.
Because we want to allow the market, see what the market does, and then come back with our assessments on where we are currently and where we see us going forward based on some of the hints, which is what the article says. You know, I think it's interesting how they word that. He'll hint at, you know, what we can expect moving forward,
right?
Versus being transparent.
No, it's definitely interesting. Again, the stock market is a roller coaster. Mm-hmm. You have to have
the stomach for
it. If you don't got the stomach for it, I really suggest you get out. I really suggest
stay away from it.
Stay away from it. Get out. It's not for everybody. It's really not for everybody. You know, it's tons of ways to make money out here, and it also depends on what your strategy is. I emphasize strategy a lot.
Right.
Because what works for you may not work for me. What works for me may not work for you. And
you can make money when the market's going up. You can make it when it's going down. You said when we
and you can also, like, it's investors out here that don't look at the market. Like, literally don't look at the market. They're long-term holders. They could care less about a scare. You know, they feast on buying and holding. Mm-hmm. And any rumors and news, they don't really play that. They play the fundamentals. So it all depends on what your strategy is. For someone like me, that's a swing trader that does a lot of option trading. I play a lot of news. I play a lot of rumors. I don't even look at
a lot of momentum plays.
Make a lot of momentum plays, a lot of catalyst plays. I don't even look at the market every day. Like, I don't. I'm not a day trader. Mm-hmm. A day trader.
Yeah, let's clarify that you don't look at the market every day.
Yeah, I don't look at the market. Right.
You're not constantly watching what's happening,
right,
as far as which way the market is trending,
right.
But you're constantly but you are aware and got your ear to
the streets.
What's surrounding the events and things surrounding the market, so that you can be educated and informed
on what's coming,
on your decisions, on where you apply your investing dollars. I just want to be clear on that. When you know, so the viewers are clear when you say that you don't look at the market every day.
Yeah.
You don't look at the trends.
Yeah, and
how it's trending. I'm sorry.
Yeah, and like I said, to be honest, I can make a trade within, let's say, early August, and I have to look at it till a month, 2 months later.
Right.
Like,
right.
Those are the different strategies that you can apply. And it all depends on, you know, what your strategy is, what your insight is, and how you want to play it.
Right.
And how you choose to invest your dollars.
Right.
So with that being said, it's 9:55. Let's we're gonna go off at 10. So we got 5 minutes. Did you have anything to add, Antwain?
No, nothing to add. I'm just waiting for Powell to get on that stand.
Yeah. So let's talk. It was some news out about China's blocking IPOs, I believe, from
big data,
from big tech companies. Was it specifically U.S. companies, or was it their companies?
I've read something that said U.S.
Okay.
You know, China and U.S. got this constant war.
So, let's just talk about China versus the U.S.
Yeah, you know, and it's interesting how their markets run, because a few weeks ago, China has been having, you know, issues. I don't want to say issues, but their market has been trending, you know, in a downward direction. Mm-hmm. You know, last week, if not the beginning of this week, it might have been last week, I can't remember. Within the last 7 trading days. I'll say it that way. They've seen, the market, begin to trend upwards.
Yeah.
But I think it's funny, how this global business works. Again, I often think of the barter system. We use China because of their cheap labor. And they
and their manufacturing capabilities, which correlates with the cheap labor.
Right. So that's where we get, that's what we see as a huge, or the United States saw and see as a huge value.
Right.
Exchange, medium of exchange of value. And, China, of course, the U.S. is the economic power currently. So, for a long time, they, relied on our bond market, because of the value that they can get for their dollars against our bonds.
Right.
Investing into the U.S. bonds. But you constantly hear, especially as of late, this war, war going on. Really specifically, ironically, is dealing really with the global, who's going to have the bigger market share.
Right.
So that's what's so interesting about it, for the civilian/citizen or retail investor may not often.
Who do you think gets, obviously, we talk about the U.S. being the biggest superpower, but China is right on our heels. Who do you think gets the biggest market share within the next 1, 2, 3, 4, 5 years?
That's a great question. I think I have to do something, it'll be good for me to do something centered around the blockchain. Because according to the IMF and articles and, some of
What's
these.
What's the IMF, just for the audience?
The International Monetary Fund.
Okay.
Right, which is the highest bank, global bank, right? All currencies, they hold a SDR basket where, global trade as it relates to currencies are measured against. But at any rate, I think that what's happening because of the pandemic, I've often heard this term, a level playing field, right? And with that being said, I believe that these digital assets and the blockchains make way to create this level playing field where it won't just necessarily be one world power. I believe that the United States may lose their current status, though. But if it's another country that eclipses or runs out in front, I'm not sure if that happens, but it's looking like China has the strongest chance to do so.
And quickly, before we get out of here, what's your are you bullish or bearish on China stocks?
I'm bullish on China stocks.
I think Shamath.
I'm super bullish on China stocks.
I think Shamath, I didn't look at the video, so I don't know, but I think Shamath recently saying people are getting China stocks wrong because there's a lot of fear around them.
Right.
So on that note, we can continue that conversation. What's today? Friday. We can continue that conversation Monday. We appreciate
during our podcast or
no live Monday.
Okay.
On that note, we appreciate you. Thank you. Like, comment, subscribe. Welcome to the New Age. Thank you, Antwain. Thank you, LJ. We out.